Bill Gates. Investing is not just about buying and selling, it's about patience, diligence, and foresight. Most of us only know Bill Gates as the Microsoft guy, but he's much more than that. In fact, he's famous for his smart investing choices, particularly in dividend stocks. In fact, of the top 7 stocks that make up over 90% of his hedge, 6 of them are dividend-paying stocks that provide regular income. In this video, I will show you those 6 dividend stocks Bill Gates loves to invest in. I'll show you how much you can earn from each of those stocks with a $10,000 investment. And in the end, I'll show you one of Bill Gates' favorite dividend stocks that has the potential to make John reach a portfolio valuation of over $10 million. Coming up next are the top 6 dividend stocks from Bill Gates' hedge fund, arranged from the good to the highest potential for making John a multimillionaire. At number 6, we have Ecolab Incorporated. Known by the ticker symbol ECL, this is the 6th biggest dividend stock, making up 2.44% of Bill Gates' hedge fund, Bill and Melinda Gates Foundation Trust. With 5.22 million shares in his cleaning cart, Gates' stake in ECL is valued at a sparkling $1.03 billion. But is this cleanliness kingpin worth adding to your portfolio basket? Let's scrub through the details. ECL's current share price stands around the mid-220s. Its stock has a solid 1-year yield of 41.51%. Over the past decade, it's gone up by 101.66%. That's, on average, a 7.33% increase in price each year. As for the dividends, the stock has a current dividend yield of 1.02%. The 10-year dividend growth rate stands at 8.39%, which is pretty neat. For dividend seekers, this growth rate is a clear signal of the company's dedication to sharing its successes with its shareholders. The question is, how much can John gain from this stock? Let's say John invests $10,000 in Ecolab Incorporated. After a year, this investment will be valued at $10,835. In 10 years, it's projected to nearly double to $22,402. Moving on to 20 years, it's projected to reach $50,740. And at the 30-year mark, John's initial investment of $10,000 is projected to reach $116,333. In total, this stock has the potential to grow his portfolio by $106,333, which includes $90,686 from the rise in stock value and $15,647 from dividends reinvested. What's important in this stock is its cash flow payout ratio at a comfortable 24.33%, suggesting that ECL manages its financial soap bubbles wisely. It shows that the company maintains a healthy balance between funding its operations, exploring growth opportunities, and rewarding its shareholders with dividends. So is ECL a good dividend stock for your investment portfolio? If you value a company with a consistent track record of growth and a clear commitment to increasing shareholder value through dividends, ECL might just clean up nicely in your investment portfolio. Next up, at number 5, we have Canadian National Railway Company. Known by the ticker symbol CNI, this stock is a key player in Bill Gates' investment portfolio, taking up a significant 16.28% slice. With 54.83 million shares, Gates' stake in CNI is valued at $6.89 billion. Now, let's dive into what makes CNI tick and whether it's a train worth boarding for your investment journey. Starting with the basics, CNI's current share price stands at $128. When we look at its performance, the 1-year yield of 10.76% is pretty solid, signaling that the company has been doing well in the recent past. But here's where it gets interesting. Over a decade, the stock has provided a yield of 131.58%. That's an average share price appreciation of 8.63%. These numbers hint at a steady and reliable growth, making CNI a potentially attractive option for those who appreciate consistency in their investments. Now on to the dividends. This stock has a current dividend yield of 1.93%. This, combined with a 10-year dividend growth rate of 10.93%, suggests that not only does this company offer a nice little payout to its investors, but it's also increasing those payouts at a healthy clip. If John invests $10,000 in this stock, after a year, the investment will be valued at $11,056. In 10 years, it's projected to more than double to $27,817. Moving on to 20 years, this is projected to reach $81,288. And at the 30-year mark, John's initial investment of $10,000 is projected to reach $252,604. In total, this stock has the potential to grow his portfolio by $242,604, which includes $177,217 from the rise in stock value and $65,387 from dividends reinvested. $250,000 sounds pretty good, right? But can Bill Gates' stocks make John a millionaire? The short answer is yes. In fact, by the end, I'll show you a stock that has the potential to make John's portfolio worth over $10 million. CNI's cash flow payout ratio stands at 28.66%, which is a healthy figure. It shows that the company isn't stretching itself thin to pay dividends, maintaining a good balance between rewarding investors and reinvesting in the business. This paints a picture of a company that's both growing and generous with its dividends. For investors looking for a mix of growth and income, this stock could very well be a promising addition to your portfolio. It seems like Bill Gates certainly thinks so, and perhaps you might too. Next, we have Caterpillar Incorporated. Known by the ticker symbol CAT, this stock makes up 5.14% of Bill Gates' investment hedge fund. With 7.35 million shares to his name, Gates' stake in this stock totals $2.17 billion. It has a current share price at $333.52. This giant in the construction and mining equipment sector has bulldozed its way through the market, boasting a one-year yield of 34%. Over a decade, CAT has gone up by 250%. That's an average annual growth of 13.37% in share price appreciation. On to dividends. This stock has a current dividend yield of 1.53% and a 10-year dividend growth rate that stands at 8.2%, showing a consistent and steady increase in dividends over time. Based on these, let's say John invests $10,000 in this stock. After a year, it'll be valued at $11,490. In 10 years, it's projected to more than triple to $39,032. Moving on to 20 years, it's projected to reach $145,806. And at the 30-year mark, John's initial investment of $10,000 is projected to reach $530,735. In total, this stock has the potential to grow his portfolio by $520,735, which includes $502,141 from the rise in stock value and $18,594 from dividends reinvested. Now, back to CAT. The company has a cash flow payout ratio of 21.4%. Which means it has solid financial management, maintaining a balance between investing in future growth and rewarding shareholders. If you're drawn to a company with a strong track record of growth, both in its core business and dividends, and you value stability and resilience, this stock could very well merit a spot in your investment portfolio. It seems to roll just the right way for Bill Gates, and it might for you too, especially if you appreciate the blend of heavy machinery and steady dividends. At number 3, we have Deere & Company. Known by the ticker symbol DE, this stock makes up 3.36% of Bill Gates' hedge fund. With 3.56 million shares, Gates' stake in DE amounts to about $1.42 billion. It has a current share price of $374.47. Despite a recent dip, With a one-year yield of negative 5.96%, DE's long-term performance tells a story of robust growth. Over the past decade, the company has seen a yield of 316%. That's a 10-year compound annual growth rate of 15.5% in average share price appreciation. This shows the stock's strong foundation and its ability to grow steadily over time, even when facing short-term setbacks. When we examine dividends, it has a current dividend yield of 1.57%. The 10-year dividend growth rate of 10.06% indicates a commitment to not only return value to shareholders, but to increase that value over time. This aspect is particularly enticing for those looking to invest in a company that grows its dividends consistently. Also, the stock has a cash flow payout ratio of 14.87%. which signals that the company is in a comfortable position to cover its dividend payments without compromising its ability to reinvest in the business or navigate financial headwinds. Let's say John invests $10,000 in this stock. After a year, the investment will be valued at $11,707. In 10 years, it's projected to nearly quintuple to $46,996. Moving on to 20 years, it's projected to reach $211,042. And at the 30-year mark, John's initial investment of $10,000 is projected to reach $923,316. In total, this stock has the potential to grow his portfolio by $913,316. which includes $887,099 from the rise in stock value and $26,216 from dividends reinvested. This stock was close to reaching a $1 million portfolio valuation, but fell a little short. However, the last two stocks have the potential to cross this landmark, and the number one stock has the potential to reach over a $10 million portfolio valuation. Stick with us to find out. DE is for someone who values the blend of solid long-term growth potential with a steady approach to increasing dividends. DE could very well be a fruitful field in which to sow your investment seeds. Despite recent challenges, its track record of growth and dividend increases makes it a contender for those looking to cultivate a resilient and growing investment portfolio. Gates seems to believe in DE's potential, and perhaps there's a lesson there for famous investors looking for growth and income. Now we move on to the stocks that have the potential to make John a millionaire. At number 2, we have Waste Management Incorporated. Known by the ticker symbol WM, this stock is a cornerstone in Bill Gates' investment landscape, accounting for a substantial 14.92% of his portfolio. Holding 35.23 million shares, Gates' investment in WM clocks in at a hefty $6.31 billion. But what's the story behind the numbers? And should you consider adding this to your portfolio? First up, WM's current share price is $208. The company has shown impressive resilience and growth with a one-year yield of 39.4% and an even more astounding 10-year yield of 412%. In other words, an average annual growth of 17.52%. These figures aren't just numbers on a page, they represent the company's strong performance and its ability to navigate the ups and downs of the market. On to dividends. This stock has a current dividend yield of 1.44%. While this might not be the highest yield you'll find out there, it's important to note the dividend growth rate over the past 10 years stands at 6.73%. Backing it up is a solid cash flow payout ratio of 23.78%, which suggests that the company manages its finances wisely, retaining enough cash flow to support its operations and invest in growth while still rewarding shareholders. Let's say John invests $10,000 in this stock. After a year, this investment will be valued at $11,896. In 10 years, it's projected to nearly quintuple to $54,269. Moving on to 20 years, this is projected to reach $279,493. And at the 30-year mark, John's initial investment of $10,000 is projected to reach $1,415,497. In total, this stock has the potential to grow his portfolio by $1,405,497, which includes $1,395,312 from the rise in stock value and $10,185 from dividends reinvested. This answers the question of whether it's a good dividend stock for investment. The short answer to this is if you value consistent growth both in share price and dividends and are drawn to companies with a solid track record of navigating market changes, WM could be a compelling choice. It's not just about the trash, it's about turning what others discard into dividends and growth, something that seems to align well with Bill Gates' investment philosophy. And now, at number 1, we have, of course, Microsoft Corporation. Known by the ticker symbol MSFT, Microsoft Corporation holds a special place in Bill Gates' portfolio, representing a massive 33.98%. With Gates owning 38.21 million shares, valued at a staggering $14.37 billion, it's clear this tech giant is the main stock of his investment strategy. The current share price of $404 speaks volumes about the company's market position and investor confidence. On to the stock's performance metrics, the one-year yield is at 59.32%, with a phenomenal 10-year yield of 972%, which means the company's stock price, on average, increases by 26.8% each year. This showcases Microsoft's exceptional growth and its ability to generate substantial returns for its shareholders. As for the current dividend yield, although modest at 0.74%, it's backed by a solid dividend growth rate of 10.86% over the past decade. This indicates a steady increase in dividend payouts, making it an appealing investment for those looking for consistent income, along with capital appreciation. It also has a respectable cash flow payout ratio of around 19.92%, suggesting that Microsoft efficiently manages its cash flow, ensuring enough room to sustain and grow its dividend payments. Although the dividend yield might seem low compared to some high-yield stocks, the overall growth potential, stability, and moderate payout ratio indicate that MSFT is a solid choice for investors seeking a blend of growth and income. This subtle balance makes it a noteworthy dividend stock within Bill Gates' portfolio, offering both security and growth prospects in the ever-evolving tech landscape. And now the big question: does this stock have the potential to make John a multimillionaire? Here's the breakdown. John's investment in MSFT after 1 year will be valued at $12,754. In 10 years, it's projected to increase nearly tenfold to $110,731. Moving on to 20 years, this is projected to reach $1,196,099. And at the 30-year mark, John's initial investment of $10,000 is projected to reach $12,863,702. In total, this stock has the potential to grow his portfolio by $12,853,702, which includes $12,846,993 from the rise in stock value and $6,709 from dividends reinvested. However, there are also high dividend yield stocks that can further boost the portfolio. Watch the video on the screen to choose the best stock for your portfolio.